Ladies and gentlemen, welcome. My name is Peter Oluoch, and today's topic is this: factors to consider when buying stocks, or rather, what do you look for? What should you consider? You are in the market, Nairobi Securities Exchange. There are 60 stocks. Okay, so how do you choose which stock to buy? How do you choose which stock to sell? But before you sell, you must buy, and what do you look for? One of the things you need to look for is balance sheets. You need to look for balance sheets. You see, balance sheet is just a record that shows how a company is doing, its finances. How much profit did it make? How much losses did it make? How much sales revenue did it make? How much assets does it own? How much liabilities? How much has it borrowed from others? So balance sheet, you need to look at it and scrutinize it very well. Because a healthy balance sheet is a healthy company. You don't want to buy troubled companies. Troubled companies will crumble tomorrow and will crumble with all your investments. So balance sheet is very, 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 very important. You need to look at balance sheet. And when you look at this balance sheet and financial records, there are the key ratios that investors look at, like PE ratios, very important. The earnings ratios, very important. You also need to look at debt. Companies incur debts. They are healthy debts. Of course, they incur debts so that they can expand. That is very good debt. If you see a company expanding, like Safaricom now is going to Ethiopia, very good. Equity Bank went to Ethiopia, to South Sudan, it went to Uganda, it went to DRC, it went to Tanzania, it went to even to Rwanda. That's very healthy, that's very good. So if you see a company getting debt so that it expands, very good. But there is also very bad debts. A while back, Mumias Sugar just took some loans so that they can pay investors dividends. That is wrong. If you see a company doing that, run. Don't wait. Kimbia uende. You don't take a loan to pay dividends. You don't take a loan to pay employees' salaries. You don't take a loan to do some of these things. That is wrong. You don't do that. So debt, a company with debt, you need to look at that. And that debt must be healthy debts, not bad debt. The other thing you need to look at is the cash flow. How much is this company generating in terms of cash? But first, is this company a company that all Kenyans use? Like let's say, for example, Safaricom. All Kenyans buy Safaricom. All Kenyans buy airtime. All Kenyans buy credit. All Kenyans buy data bundles. All Kenyans use M-Pesa. Everybody is using M-Pesa. And now M-Pesa is even going global. People are using it even outside Kenya. Even in America, even in UK, people are using M-Pesa. So a company that is not only being used in Kenya, but is going regional in East Africa, is going global, is a very good company. And you need to buy that. Regional companies are like KCB is a regional company. Equity Bank is a regional company. Centum is going regional. Very good stock to buy. Safaricom, of course, I've mentioned. So these are stocks that you need to buy. Companies that are going regional, companies that are expanding, companies that have good balance sheet, companies that have healthy debts. The other thing you need to look at is the dividend yield. You see, these companies, they give us dividends once a while, not once a while.